In this chapter, we're going to get more technical. We're going to use TradingView as our charting platform through the rest of this course. We're going to focus now on the different types of charts. You've probably seen charts like this before. CNBC loves to use line charts because they're simple. A lot of people don't know how to read anything other than a line chart. But as traders, as active ASFX traders, we need more detail. We need more character. If you remember from the crash course, I mentioned the characterization, the personification of the price action, right? Write that down. Personification of price action. We can't get that with this. Just doesn't cut it. This now, the next slide you'll see, is a bar chart. It's closer to what we need as far as how much detail we want to know about what's price action doing, but it's still not good enough for the way that I'm going to teach you how to trade, for the systems that we've built. The backtesting is everything for us. The backtesting tells us if what we're trading in the future is going to be profitable or not. The backtesting is too tough, in my opinion, to do based on price patterns here on this bar chart. It's possible for some of the old school guys, but for us, we're going to be focused on these beautiful candlesticks. Candlesticks are interesting, but I think if you can learn how to read them, they become actually like a really useful tool in understanding what price action is doing. So there's three types of candlesticks, in my opinion. Very simply put, someone's going to comment and say, Austin, there's so many different types of candle formations. Right, those are candle formations. These are just the three types of candlesticks. So think of it this way, and I don't think anyone else has ever said it this way. I'm just taking credit for it because I think it makes sense. We have bullish candles, we have bearish candles, bulls and bears, and we have doji candles, which show indecision. Bullish candles, price opens at the start of the time frame and moves higher to close at a higher price at the end of the given time frame. Bearish candles open at a higher price and close at a lower price. We can look at price action charts. For example, if we go back to this, we can look at this 15-minute chart. Each one of these candles is worth 15 minutes of price action movement. So it starts at 12 o'clock, that candle closes at 12:15. 12:15 to 12:30, 12:30 to 12:45, 12:45 to 1 o'clock, 1 o'clock to 1:15, and so on. So when we're talking about bullish or bearish candles, it can be a bullish 1 hour candle. What did price do in that 1 hour? Or a bearish 1 hour, or a bearish daily candle. It was bearish for the day. Price moved lower. It opened at a higher price and closed at a lower price on that given time frame. Here I said time frame on the charts is represented by one candle. Like I said, on a 4-hour chart, each candle is worth 4 hours of price movement. The doji candle is indecisive. It opens and closes at the same price. In between, let's just use an hour for example. If it was to open here, it could move up and down in that hour, but still come right back to the close price. It kind of looks like a plus sign. That's what the doji candles are. It'll have a wick above and a wick below because that's price moving in between that time frame. But where it closes, if it's back at that same price that it opened at 1 o'clock, if 2 o'clock it's at the same price, that's a doji candle. So let me give you some examples here. This is a great detailed explanation of what a bearish candle is. Now, we're going to look at colored candles to start, but we're going to move into black candles in a few minutes, and I'll explain why. Black candles are much easier to read in my opinion, but you have to understand the difference between bullish and bearish candles before you can just turn off the color. So the red candles always, I don't want to say always, normally symbol the bearish movement. So what that means, what that looks like is we have our high, which is the highest point that you see in the pin. We have our open price, which is the body start. We then have our close price, which is where it closes at the end of that time frame. And then we have a pin on the bottom, which shows how low price moved in that time frame. Now we have bullish candles on the inverse of that, where the pin on top, that's the highest price that it went to in that given time frame. We have that pin on the bottom as well. That's the lowest price that it went to in that time frame. And then we have our open price at the bottom of the body, and we have our close price at the top of the body. So if you want to save these pictures, here again is the bearish candle, here's the bullish candle. As you get more experience, and it only comes from watching more videos from me and actually trading and looking at charts. But once you get more experience, we can move into black candles. Black candles remove a lot of the emotion that you would see if you had red candle, red candle, red candle. You're like, oh man, I gotta be selling it. That's FOMO. That doesn't lead to consistently profitable trading. That's chasing momentum. And there's no way you're gonna make consistent money doing that. So taking the candle color away, for me, has helped remove so many emotional mistakes. And I'm really being serious. You'll think it's kind of crazy, but to every trader that I've worked with, thousands of them now, from all over the world, none of them that switch to black ever go back, right? Once you go black, you don't go back is the funny saying. Same thing here with the candles. I think they were actually talking about charts when they made that saying up. Now, the reason why black candles can work in Forex and not in any other market, this is a picture of a stock chart. This is SLV. It's an ETF of silver on the daily time frame. So each one of these candles is an entire day's movement of price action. Look at all of the gaps between candles. They're everywhere. Those gaps make it very hard for technical indicators like moving averages and things like that. It makes it very hard for them to paint accurately, to show trend accurately, versus candles like this with no gap make it much easier for price action to be fed into the formula that then builds the technical indicator. In this example, I'm talking about a moving average. And that's why technical indicators like moving averages, and we're going to go into detail with those in a little bit if you don't know what they are, they work so much better in Forex versus any other market strictly because of the fact that Forex does not have gaps like the stock market does. Simple as that. One other thing I want to show you. You're going to see now as we get closer here, I have moving averages on the chart. I'm going to break those down for you in a couple of chapters. I want you to also notice my background is gray with my black candles. So you'll see the gray background more than the white background as we go forward. But most importantly, I wanted you to see here, there is a tool in TradingView that'll mark the vertical line. That vertical line being marked will also give you the date and time at the bottom of that chart. So for example, where this vertical line is, it's on this black candle right there. So what that's saying is that this is at 6:30, which means this started at 6:30 and closed, because we're looking at a 15-minute chart, at 6:45. So what that time is saying is that the candle previous started at 6:15 and closed at 6:30. So if you were to mark, okay, Austin, I want to know what time was this right here at the end of this bullish candle. Well, I could put the vertical line right here, see that it's 6:30, and then I can know that is the 6:15 to 6:30 candle. Okay? Let's keep moving. We're going to talk about bid, ask, and different order types.